Hey everybody, Sean from Rest to Live. And tonight we are hitting on episode 28 of our sneak peek for the week. We're not doing it live because of some internet issues on my end, so apologies. We should be back to that in no time. So there's really three topics I'm going to discuss. It's going to be a pretty quick one because I want to get to the point really right on time here. Number one, we've got Netflix earnings coming out this week. I'm going to go over some details on that. I'm also going to talk about Squid Game, which is a really popular series on Netflix, and the way that this can affect things with those earnings. And then additionally, I'm going to touch on housing data quickly. So without further ado, let me set up here to share my screen with everybody. And should be just a moment. All right, so with that, I'm going to hit my present mode here, if I can ever get to that right button. Cool, so let's jump right in, not waste any time. So let's talk about Netflix earnings. First and foremost, for Q3 results, this is really the first big tech company we're going to be hearing from. And in a lot of ways, this could set the stage, not just for other streaming enterprises like Netflix or Disney Plus, et cetera, but just in general, see how people are spending. Are subscribers still subscribing and more people signing up for different services? I think it's going to be very indicative of what we can expect from tech in general. And also maybe even any other clues as far as what we're getting as far as future earnings growth, what they're calling for forecasts, et cetera. I think it's going to be a pretty important one, as Netflix often seems to be sort of a bellwether for the streaming space. Now, this will be out on Tuesday after the market closes. But what I wanted to also call out, aside from just this earnings piece, is as we look at Netflix for the year, so that's year to date, the shares are up 16.2%. So look, 16.2% is nothing to push aside as if that's not a great return. I mean, if we all had 16.2% returns every single year, we'd be retiring very wealthy and very young. But in retrospect, the S&P is actually up 19%. So if you were just sitting in a broadly owned market ETF or index fund, you're actually doing better than if you had held shares of Netflix on their own. Just an interesting point. Now, that said, that doesn't mean we can't see something amazing happen on Netflix. But, you know, if we were to call it a year as of today, you would have been better off investing in the S&P 500 straight up. So just something to be aware of. One thing to really call out here around these specific earnings is that the sort of market consensus, or many of the analysts anyways, are really expecting to hear a pretty positive outlook, and they are expecting this to be a turnaround and getting Netflix back to that growth metric they were used to. So we'll see how it turns out. We do know still that there is just heavy competition around a lot of these other vendors. Disney Plus, Amazon Prime, my gosh, the Hulus of the world, everybody. I look at my own TV, and under apps, I feel like there's more apps than channels sometimes. And I have no time to really watch any of them. Although my next slide, I'm going to make a point on that too. And one additional piece I want to call out here around Netflix, before I jump into the next piece, is they're also in a little bit of an acquisition mode. And I'm really curious to see what we learn about this, or what the future looks like in this space. So Netflix has also started to pick up into the gaming space, and they bought Night School Studio. I don't have a lot of details to share just yet on this. It's not the point of this particular video, but I am going to be following up on this, and this is something I want to learn more about and see if we can start to determine what their growth strategy might look like in and around the gaming space, not just what's being released, but what we're learning about why these targets are being chosen and so on. So just on the note of Netflix, I want to talk about Squid Game. Number one, as you can see here, yes, I quite literally did watch the entire series. It was a really great watch, I thought, something very different, kind of a fun take on a lot of similar styles, of that action market, so to speak. A lot of suspense there as well. And I went and called a bunch of friends who have watched this and said, hey, what was your take on this? Do you think that if you didn't have Netflix, would the kind of like presence or word on the street about this show maybe make you think you might want to? And generally, a lot of people said, based on what Netflix is doing, the way these shows are coming out and getting so creative, might be something worth watching. If you're not used to watching a dubbed show, you know, I wouldn't think too much about it. After one episode or so, you kind of just get used to it. And again, Squid Game is basically, I don't want to give anything away here, but essentially it follows a group of people who are working their way through a number of challenges that are very serious from a life or death perspective, all in an effort to essentially win a large sum of money at the end of the game. And really the point of the show, if you dig down to the details, is really a play on the way people live with debt and how much debt controls their lives. And they're literally give up their lives just to get rid of that debt, because in many ways, the debt is as much a prison as prison itself. Now, the reason I mentioned Squid Game, other than the fact that I liked it, is this actually could have real serious implications on Netflix earnings. When we originally were looking at what price targets would be or what the earnings were expected to be, we're wondering whether or not Squid Game coming out towards the end of September could have actually caused a boost that's not currently sitting in the market price right now, and we might be hearing about it when their earnings come out. So just something to be aware of, that the fact that this series was the largest series launched in history for Netflix, and as you can see here, it hit 111 million users. That you know, those are big numbers. That's enough where people who maybe weren't on Netflix before might have considered trying it out or getting on there now. So what I'm doing is I'm building into my personal model what I think we could see for upside, what kind of price targets are out there. And then I'm seeing if there's anything like this in the past as far as Netflix releasing new really big shows, if there's any kind of negligible or significant bump in subscriberhood. So again, just taking it one layer deeper, like I always say on these videos, don't just read the surface level, really dig in and understand what's going on. I think it's something really important to be aware of. Now, the last piece I want to talk about is housing data. So from the housing data perspective, here's the deal. Things have been pretty crazy, pretty wild. It's been, for lack of a better way of saying it, it's been very expensive for people to get into homes. It's very competitive. There's a lot of cash deals going on. I think in general, from my friends who are in the space, what they're seeing is multiple offers on every home. We know materials have been really expensive and hard to come by. So the housing data we're going to hear this week is from a few different sources, but what I want to do is kind of aggregate what the message is going to be. First and foremost, I just want to call this out very broadly. The entire sector is still continuing to struggle in and around material shortages, the affordability of these homes and the markets that they're in. We're looking at continued increases in pricing. And, you know, there's something to be said for when people are getting themselves into trouble by taking on more home than they really can afford, and how close they are to sort of that line of like, we're about to cross over to the danger zone, frankly. What we are expecting here this week is that new home building is likely to be unchanged or sort of right on par where we're expecting it. We also know that building permits are expected to pull back to 2.4%. Last month, they were actually 5.6, or a rise of 5.6% rather. So a little bit more normalcy in building permits. The other piece I want to call out too is there's a 3.3% monthly increase in previously lived in homes, really, you know, used homes or homes that other people have lived in before you, or as I put here, just not a brand new home. And the other piece that we're also seeing that sort of creates a sort of different side of the table here is this idea around the inventories. We know inventories have been tight for quite some time now. I look at a lot of the markets just around where I live, and it seems like when something hits, it goes really fast. I think what we're expecting to hear from the National Association of Realtors is that inventories are rising, which, and this is my thought process here, this should ease some affordability. But frankly, I don't have enough data to really double confirm what I'm seeing here. So I need to get some of these results to come out, confirm that we're looking at this kind of information, that it's accurate, and then I'm going to have my own consensus on what I think we're going to see from the housing perspective. So look, that's it. That's what I've got for you this week. I wanted to be really quick here, get right to the point as usual. I'm just going to kindly ask, if you're still watching, I'd love a like on the video. I don't always ask, but I haven't been getting a lot of them lately, so we'd really appreciate it. Otherwise, I hope you have a great week. Hope you're trading and investing well, and hope everything else is good for you. So with that, thanks so much. It's Sean. Have a good week.